Hey everybody, welcome back. Well, another wild day. Again, ES just doing what the ES does, which just keeps to motoring ahead. Doesn't really seem to care a lot about what's going on out there at all, but another higher high, another all-time high close. It's very hard to really think anything else, right? Now we have the Apple news we have to go over. We have what's going on with Oracle, where it's up $10 after hours. We have to prep for CPI. We have a lot going on. You have the FOMC tomorrow and then PPI Thursday. So we're going to cover a lot of ground in a very short period of time. There's a couple things in here you might want to watch 2 or 3 times, but let's just get to the basics. So if we just drill into the basics and look at a 5-minute chart and just see what we've been dealing with. And it's the same soup reheated. They're having these huge drops to kind of shake and bake, and then they're getting people out, and then they're just ripping it. And they're doing it over and over again. Now, we talked about this about a week ago, 2 weeks ago, actually, that the skew changed and volatility was going to increase. People aren't going to be aware of that because they're going to be looking at the VIX. But if you watch that video, you know why this is happening and how to take advantage of it. And these dips are actually meant to be bought. And this is presenting really nice opportunities for us to get into trades. But you really want to watch these support levels and then watch when they flip those support levels and then get involved. We marked this one off, I believe, earlier today. And you just see it pretty clearly. We did it, I think, in the pre-market live. It held. I mean, there's not really much more to say about it. If you zoom out on these levels, they're, again, as someone likes to say, absolutely glaring. And again, you are flipping resistance, and it is becoming what? Support. Just very hard to say that. There is something that is bothering me, though, and I'll get to it in a moment. If you take a look at the NQ, same soup, reheated, right? Well, maybe not. Maybe it looks a little different, doesn't it? Why? Because we're breaking out, and this is kind of crazy, but we actually are breaking out ahead of what's going on here. Now, you could have had a signal from this today about 1 o'clock, and I wonder what happened at 1 o'clock today. For those of you that know, you had a bond auction. And again, we'll go through that data, but you really want to watch these bond auction guys. They are giving you absolutely glaring signals. I don't know. I need more words, but you get where I'm going with this. This is what we're dealing with, and it's over and over again, guys. Now, this is what's bothering me that I'm trying to wrap my head around. And you'll see why after I start pointing out what's going on with the bond market and the dollar. Why are financials doing that? Why are financials rolling over? Right? They are rolling over. They broke the 55. I use a 12, a 22, a 55. You should use what you're comfortable with. But very clearly, what are we doing here? We're breaking down. It's not what you want to see. It shouldn't make you feel warm and fuzzy at all. I mean, here you are. Oh, here's your breakout. Everything, we're really smart, and then we roll, right? And it's not one name. It's all the names. Goldman's breaking down. JP Morgan, you're not really seeing anything. JP Morgan closed under the 55 today. Like, that's not really what anybody wants to see have happen, right? Like, you just don't want to see this. Now, are we just rotating? Yes, but I like when financials do what they're supposed to do. If you go here and take a look at the Qs divided by the SPY, which we like to use for a relative basis, we are seeing rotation. And again, we do this to look at rotation. If you look at yesterday's video, which we were really hyped on when we were looking at these rotations and how you could see how the KRE is comparing to the SPY, right? And you're seeing that this is hitting like all-time lows, and it's definitely something that is not really what you want to see, where regional banks in relation to the SPY are at all-time lows, right? Like, it's just not where you want to be performance-wise, relative basis. Or if you look at IWM, small caps versus the SPY, right? This is pretty much like the exact opposite of what you'd want to see. And there's no reason to go near these names, and this usually leads to corporate profits. But you always want the Qs, listen, you always want the Qs outperforming, because that's where the growth comes from, right? So when you look at these, you can see the breakouts, and that's what you want to pay attention to, those breakouts. They're very significant. You always want growth to lead. That's why I always look at VUG by VTV. People will look at other ones too, but you always want growth to lead. And this is just Vanguard growth divided by Vanguard value. And you come here and you're like, nope, we're good. We're breaking out. We're actually breaking out. You can actually see here, you pulled back, and then from 23, and then how you've been ripping ever since. But again, if we just go here from, and we can just do from 24 on, just so you can get a sense of it and what we've been doing, you've just been grinding higher. It's just growth's time to shine finally. And you had some underperformance here where it was value's time to shine for a while. But you always want to look at this, and it's very significant because it gives you a greater picture. The biggest one is this. You always want the high beta stuff, the growth to lead, and it's doing just that. So what we want to have happen is happening. What I don't like, and I don't mind that tech is outperforming financials, like on a relative basis, I don't mind that that's what's happening. And there's a whole litany of reasons why you actually want that, right? And I do like that when you look at the Qs, if we break this out here and throw this back in before I explain this, I do like the Qs are breaking out. I do like that you formed a flag here and that you broke out and you're hitting all-time highs. I think that's great. Oracle's earnings were excellent. We're going to get into it. They're talking about the future. It's why Microsoft is up, actually. But what we have to take from all this is just what's going on under the hood. Well, why would financials be doing this? I don't have the answer yet. Maybe we get it tomorrow. Maybe they regress. Maybe they regress and just start grinding higher. Maybe it's not as big of a deal. But there's certain things like that that are really, really have me thinking, where you're watching the regionals fall apart, and they are. The regionals are falling apart, and especially on a relative basis. And so are XLF. And it's not like we need to be that concerned about it, but we need to be aware of it, right? Because then you go and take a look at energy, and energy's starting to hold in here, isn't it? And overlay, again, this is the most simplest of indicators. You really aren't going to go near it. The 55, the 22, and the 12, that's what I use. You should use what you're comfortable with. If I drill into this and I just go 3, 5, 8, which is overlaid on a 15-minute chart, you're still not breaking out there. And then you go here and watch this. Now they're all connected and they're all rolling over. That's not what you want to see from the financial space. Now we still have leaders. For example, if we go here and take a look at the SOX and we overlay this back on a 15-minute, this is exactly what you want to see on the SOX. You want the 3, the 5, and the 8 lined up. These are daily moving averages on a 15-minute chart. That's what you want. That's perfect. It's beautiful, right? The wild card to me is the financials. Now, are they getting out of financials ahead of the Fed? You would say yes. Yes, they are, because they think it's going to be bad or CPI is going to be bad. And then you're going to go here and look at the 10-year, and you're going to look at that and say, well, the 10-year, let's do this in line form. Well, the 10-year is telling you that we're actually in better shape than we think we are. And we know that from the 10-year auction today, and how the market just completely rallied after that. But before we even dive into that, let's get into CPI and what to expect tomorrow, because that's the best way that we can prep and be prepared. So we need to understand what we're looking for tomorrow, because the easiest way for us to do this is just look at core inflation. Now, it's always something different, and this time they are focused on core inflation. Why this time core inflation? I think because of the way crude oil and gas has already come down, that's why they're focused on core. Remember, core takes out food, right, and takes out gas, oil, all comes out of there. Energy, or core is actually X energy. Let me move this over. X energy, X food. All right. So that's always when you think of core, that's what you need to think of. So just remember that. X energy, X food. Now, if we look at this, 0.3, 0.3, 0.3, you're in line, you're not expecting a change. Now, core inflation, if we take a look right here, 3.6, 3.5, 3.6. So this is where we were, and so they're expecting 3.6, and that's kind of interesting, right? But then you get into this, 0.1, 0.1, 0.3. So when you're starting to look at this data, just remember the first number is previous, and then this is consensus, and this is the forecast. And this is what was forecasted, and this is where consensus is. Just understand when we're looking at this, what we're looking at. So I don't know how many people remember that this is from Trading Economics or not, so let's go over that again. So you get it previous, consensus, forecast. So what is this telling us? Well, they're expecting a lower number. I don't know how you're supposed to do that with this, but let's just keep on going. And they're expecting inflation to absolutely plummet. Now, month over month, they're expecting to go to 0.1 versus 3.4. Well, that's kind of interesting, but that's what they're expecting. I don't know why they're getting that, but that's what they're getting. Now, what is pertinent for us about this? The estimates for month over month, they're leaning towards this actually coming in lighter when you start looking at what some of these investment banks are doing, which is a little bit of a surprise. But for our purposes, for our intensive purposes, what we need to focus on is what are they going to come out with, and then how are we going to react to it? I mean, that's really it. So our purposes, we're really focused on this section more than anything else. And if you look here and compare it to this section, what you're going to note is that for the majority, they're expecting lower. Now, I don't know how month over month goes down, but year over year stays the same. And I don't know how year over year is supposed to stay the same if the number here, which is the CPI, is actually going to go up, but this is going to go down month over month. So there's a lot of things that, to me, when you really understand what these numbers are, that just don't add up. But let's just keep going with it. What most of the firms are looking for is they're looking for the core data. So we're going to start there. Out of the core data, I just think it's important for us to understand where we are so we know where we're going. When we look at core data, this is where we've been over 5 years. And essentially, you should be able to see these moves from '01 on, just really slight stuff, right? You can see how you slid down. And then in between these, you've had some rallies in here, right? And that's normal stuff. But what I would take away from this and what would be most troubling is the change in trend. In other words, here's that 0.35 kind of area, 0.4, and then you're up here 0.4, 0.4, you're getting up there, right? So you had a level here that you weren't really breaking, and then you broke it. And then at the same time you broke that level, you're now going higher. And that's always been the rub here and why people are getting concerned. It's certainly one of the reasons why I was concerned looking at this data. But the data is getting better. And there's a couple signs of that, and we'll get into that in a second. But just understand, you come in at 0.4 or higher on core month over month CPI. If you take nothing away from what I did, look at trading economics or whatever your data is tomorrow, 0.4 or higher, and you have an issue. Now, I created this cheat sheet for everybody, and it's easier for me to do it this way so you can see it. But this is core month over month. And that's the numbers that we just went through. You can screenshot this and you can save it for tomorrow. But essentially what this is going to tell you is this is how JP Morgan sees the world. And what they're looking for is if month over month, what are the odds or chances of something happening? And if it does happen, what's going to happen because of it? There's a 5% chance you come in at 0.4% or higher. I think this is really important because I just showed you that. So if this happens, no one thinks that that's going to happen. So if this happens, there's a 95% chance right now that does not happen to them. But if it does, they're expecting the S&P to fall 1.5% to 2.5%. And I think that's important for us to get. Like, that's not a small drop, and that's certainly going to tell you that inflation's way higher. But the chances of that are 5%. And then you get 0.35 to 4, and they're saying if that happens, all right, you're going to fall maybe 1.25%, and there's a 15% chance of that. And this is where it gets interesting, because you take in the 0.3, there should be a point there. And they're saying, if you come in line to up, and if you look at these numbers, let's just say you take this and it sways both ways. So you'd go 40 and then you'd go 55. And just add it together, you get a 60% chance this way that you're going to come in 0.3 or lower, right? And it's not that way because you have to take the 3.5, and I get it, but I'm just trying to give you an easy way to look at the way that they're reading the world. And what they're saying is 75 basis points down or 75 up if you come in 0.3 to 3.5. And 25% chance between 2.5 to 3, and then you're going to go up 75 basis points to 1. And then 12.5% chance you're at between 0.2 to 2.5, and that's going to get you to 1.25 to 1.75. And there is a 2.5% chance that you're going to come in below 2, and then you would come in at 1.75 to 2, right? A 2.5 gain, which would be huge. But let's take this as the demarcation line for a second and look at what they're saying. And if you total up this way in the probabilities versus totaling up this way in the probabilities, you're going to note something. They are tactically shifting what they're doing, and they're tactically shifting to a bullish stance on core CPI, bullish for equities. So they are shifting that way. Sometimes it's middle of the road, sometimes it's a hot number, but numbers have been coming out and they've been in the favor of equities. And I think you're seeing some of that today, and we're going to get to that now, but this is really important. Then we'll get into how we would view this. Now, after hours, we're clearly going to talk about Oracle and the fact that it's up, but there's a chart that I put together for everybody, and I want them to just kind of take a look at this chart in a second, but let's do it this way. You had a 10-year auction today, and on that 10-year auction, watch what happens. This is why I tell everybody, even if you're just day trading, to watch what happens at these auctions. And it really is very clear that at 1 p.m. you had an auction, and everybody will see this, and then they'll just go, well, why did the market rally at 1 o'clock? And people won't have a clue, right? And look at what the low is on the market. Especially if you're trading zero-dated options, if you're not looking at a chart like this, you are clearly at a disadvantage, because all you really had to do was just watch the bond market and go long equities. I mean, you really didn't need to do anything else like that. It also let you know that you're fine holding your equity position. So if you don't do this, you have an issue, right? This is rudimentary 101 kind of stuff, guys. Just FYI. I always throw the dollar in there as well, because I want to see what the dollar's doing. The dollar usually will fall. Okay, so the dollar drops, equity, because they're buying bonds, and this was a really strong auction. So you have a really strong auction ahead of CPI and the FOMC tomorrow. That's kind of interesting, don't you think? Like, why wouldn't you wait for that? There's only one reason why you wouldn't wait, is because these institutions are telling you what I just told you. They're expecting CPI to be weaker than expected. And if CPI is weaker than expected, then the language of the Fed might be different. And we also get the dot plot tomorrow, which tells us what they're thinking. But you're going to want to have a chart like this and continue to have a chart like this and watch the action. This let us know today that anything that we were day trading in the middle of the day, we're fine, and watch the trade individually of itself. But now that we don't have to worry about the macro issues, right? And of course, this is a macro issue, and we always want to think that way. That's why one of the things I always point out is that you have to look at the macro and what's going on there. Then after that, we always want to look at what? The fundamentals of the underlying companies. And then, of course, we always want to look at the technicals as well. And that's going to give us what we like, which is obviously the stool. And you can see that right there, right? And again, just point out, this is how I view the world. And this is how every institution is set up that's on the street. Right? JP Morgan set up this way, Goldman set up this way, Morgan Stanley, they all have an economics department. So they're looking at the macro, they all have fundamental analysis, and they all have technical. Why shouldn't you be set up the same way? Just seems to make sense to me, right? So if you think about it that way, it might make a little more sense. Look at this on a dollar and you can just kind of see what's going on there. But bottom line with this, more than anything else, for us to take away, for you to take away, is that they bought bonds ahead of what's going on. And then you can see how that affected the market. TMF, people were wondering probably why TMF all of a sudden spiked up. Well, if you know to be looking at these bond auctions, you had a pretty decent trade there. And you can see that also in TLT, just disclosure, I own TLT right now. And you can see how it did. So they're expecting not only CPI to be good, but they're expecting the FOMC to be good, or they wouldn't be putting this kind of money to work right now. They just very simply wouldn't do it. Now, there are some names we should focus on here. GME, this is kind of interesting. Now, they just went out there and they raised a bunch of money. They could always do another secondary. I don't, at the time recording this, they haven't done one. So if they do one, they do one. I'm just going to point out patterns and then you can do what you want with it. But this is a pretty interesting pattern to me. We did buy calls on this. And for me, we're up over 100% in those already. I'm still in them at the time of recording this, and it's after market, so there's not really much I'm going to be able to do about it. So what we could see here is very simply, you have these tweezer bottoms where you have bottoms where they're both wicks, and that's really called a tweezer bottom down here. You came to the same level and you held. That was really powerful, but we would have even more. But wait, there's more. The body of this bar completely encompassed that bar. The body of this bar completely encompassed that bar. So you actually have a bullish engulfing. This usually leads to another bar higher, usually. Now, you never know what you're going to get. Life's like a box of chocolates here. You have to understand that you're just trading speculation, and you don't really put a lot of faith into it. You don't really know how this is going to end, when it's going to end. But this would be really where I would be looking at it from a target perspective. I'm looking at it trying to get up to that 38 range. I think we can get up there. And I got a bunch of calls and we're doing quite well with them. It is what it is. It's just a highly speculative trade. But when you see that particular pattern, you want to pay attention to it. You can see the curvature and everything right here. And I think that this is distinctive. And I think that this is certainly something that you want to pay attention to. So it's certainly something that I'm going to pay attention to. I got a lot of comments about the walkthroughs on trades. So I will do another one of them today. But there's some things that we really need to address that people need to be aware of that I think are pretty significant for you as a trader going into tomorrow. So the GME is going to be interesting because that's going to move. We'd be remiss not talking about Apple. Now we have to really get into this because yesterday it was a non-event and sold down because there was nothing going on. Today, some of the announcements, it became very clear what they're going to do with the OpenAI, what they're going to do with what they were now referring to as Apple Intelligence, which is this new division, is they're going to train Siri to do different things. I'd just be happy if it could turn my alarm on. What they're saying is they're going to be able to say, hey, move photo from here to Instagram story, and you're going to be able to do it. Things like that. Or send this photo in an email to this contact. Like you're just going to be able to do that stuff and it's going to do it. That is really very high level stuff that I'd be amazed if they can do. But let's just say they can. It becomes a huge productivity app, right? And then people are going to want to do that. What is really good about this for them are the upgrades. So this was a note that came out later in the day today. And essentially what it said was, largely as expected with the main highlight, the launch of Apple Intelligence, its AI system, and this is out of Goldman, the confirmation of its tie-up with OpenAI, big changes to Siri and Apple highlighting privacy as its differentiating AI technology. Now, that's very different today than how it started yesterday with OpenAI is going to have access to everything. And that's why the stock sold down today. It's talking about the privacy and how they're going to differentiate themselves. That's a big difference from what, well, that's really off, but from what we were talking about yesterday. For the upgrade bulls to use Apple Intelligence, it means a new iPhone for most, and this is the key thing. Apple Intelligence will only be available on iPhone Pro, Pro Max or iPad and Max with M1 or better. Okay, this is really important. Okay, and the reason that this is so important is because it means massive upgrades. And I think that's the part that everybody was not seeing yesterday, including myself. I didn't really get like, okay, but when they start explaining that you're going to need this technology with this, everyone is going to upgrade their phone. You know, the majority of people are going to upgrade their phone. I should say it that way. So you finally have this product cycle that's coming down the pike where they're going to do something completely different. It's not like last year's upgrade where, you have this and the phone weighs less than a gram and you have this little silly thing that you can do and the picture's a little bit better. No, now it's like this productivity hack that you need, right, in order to compete. Very way that they're doing AI chips with NVIDIA. This is really important, and it's way more significant than I gave it credence to yesterday when it was mapped out today. And you can see that, and it's worth spending time on. The important thing about this kind of stuff, guys, and I want to point that out there. If I could give any advice at all after trading 25 years and save everybody an inordinate amount of time, it is to be fluid. It is to understand that you might be overlooking something, that you might not understand it correctly, and then just go, oh, that makes a lot more sense. It's the product cycle and the inability of your current phone to do all these new things that are going to make people more productive and save me time. Oh, okay, I want that. How do I get that? Oh, here, buy this. So again, it's really important to stay head on a swivel and go, you know what? Yeah, I didn't really get it. I didn't really think about it that way. You're going to need this new phone. And once you kind of got that, I said, I wonder how many of these phones there are. And if you look out there, it's only 5% of their current market that's out there right now that could even support AI, meaning the iPads, the iPhones, the computers, 5%. That means anybody that wants to stay in this ecosystem has to upgrade. It's a very big deal. It's a much bigger deal than I thought it was going to be, candidly. As soon as I realized that, got involved, bought stock. We bought calls today. We did exceptionally well. Could we have done better if I understood it sooner? Yeah, but a bird in the hand. It is what it is. And disclosure at this time, I have a position, stock and calls. But what does this mean? I think it means that a lot of people have been underweight the stock for some time, and they're going to have to start buying the company back. And I think that's what you saw today. I think you have what we refer to as an oh crap moment. Underweight the largest company in the S&P 500 because it hasn't been going anywhere, and here we go. Now you overlay this kind of move, right? Let's just look at this on a weekly. And you look at that and go, you've got to be kidding me. Now here's what's really cool about this move. Today is Tuesday. I'm not going to clean all this up, but look at where we are already, and it's only Tuesday, right? That's all we are. And look at the weekly volume already. 1, 2, 3. Okay, I'm already over the past 3 weeks on weekly volume. Okay, I'm going to have a breakout bar in weekly volume by the end of the week. There's no way that we're not getting to the top of that with only 2 days, especially with CPI tomorrow, especially with the Fed. And after the Fed acts, then I think you're going to see even more. I think you're going to see more follow through on it. I really do. But we have to get through the Fed and the dot plot. And we're going to cover a lot of that in the pre-market tomorrow. What I'm trying to do is give you broad strokes on what happened today so that you have something to work with. The other thing that I would focus on a lot that I think is really important is what Oracle said today. Now, a lot of people are going to look at Oracle's quarter and they're not going to get it. And they're not going to get it because they're going to look at this miss and go, oh, they missed. There is a major shift going on here on how these companies are spending money. And the reason I'm doing this is because your comments. So even if I don't get to answer all the comments from time's sake, I do read your comments. And when you guys say things like, hey, explain more things to me so I can understand why things are happening. This is why things are happening. If you have a product cycle and people are going to the next, they only have so many dollars, right? So they're going to spend their dollars on other areas. So some products are going to miss while other products are going to go higher. Let me give you an example of what I mean. Now, for our purposes, I'm just going to clip out some news headlines so you can see what's really important here. And I just want you to get this. Oracle misses fourth quarter earnings, stock surges on booming AI demand. That was really the thing, the AI demand. And let's just walk through some of the lines here so you understand what really happened. Oracle, fourth quarter, 163, 165 miss, 4.3 versus 455. But when you start going into cloud revenue, it was up 20%. When you start looking at cloud infrastructure revenue, 42%, think data center. Cloud application revenue up 10%. So they are growing in the hottest field right now. And that's really important. And the reason for that, people are saying, oh, it's the partnership. Yeah, the partnership is good. But the fact that they're extending the Azure AI platform and Oracle Cloud Infrastructure to provide additional capacity for OpenAI, cloud infrastructure revenue up 42%. What is growing? cloud infrastructure revenue. That is the key words. So when they see that, there's a couple things they said in here, and it's exactly when the stock moved if you go and take a look at it. Oracle expects each successive quarter to grow faster than the previous quarter in fiscal year 25. Oracle expects each successive quarter to grow faster than the previous quarter. Sequential growth over and over and over again. Okay. There was another note that I'm going to get into on Saturday where Taiwan Semi said 3 nanometers booked out to 2026. So again, when you have stuff like that, the chances of NVIDIA missing earnings or Oracle missing earnings, like all of a sudden, what do institutions love? Okay. They just want to see certainty. Tell me you're growing sequentially. Okay, great. Oracle says signed over 30 AI sales contracts for $12.5 billion. This is really big stuff. I would not sleep on it. I do expect it to be misunderstood tomorrow and people not understand why the stock's bouncing around the way that it is. It was a really good opportunity for us to trade this after hours when people didn't get it. And all you had to do was just let it settle down and just set up. And it was real simple. Once you could see it, it would set up. It was easy to get in off this bar. You could no longer, all you had to do was this, guys. I mean, whenever in doubt, just mark the previous close. That's all you have to do. If you mark the previous close and you watch how you acted on the close before earnings, and you don't have one close under it, not even when earnings hit and they were considered a dumpster fire, and it does this, that's what you want to pay attention to. So I would focus on this tomorrow. I would focus on Apple tomorrow. And of course, for you speculative traders, GME is going to be a lot of fun tomorrow, I think, barring they do their $3 billion secondary in a couple days, which I don't foresee at the time of recording this. That's it.